Good evening, fellow Forex traders. It is Monday, November 5th, 2018, and it's been a few days since I've been able to do a video. I was busy last night and just didn't get to it. So, luckily there hasn't been a whole lot of action here to talk about in FX land, but we're going to go through the charts real quick and see what we can find in terms of decent setups and potential trade opportunities. So quickly, I want to go through the major stock indices. Let me bring this a little better into the picture here. S&P 500 moved up about a half a percentage point today, a little more than that. You can see on Friday we were almost to this 200-day moving average. Let me get in there a little better. And pretty much rejected off that. So it'll be interesting to see what happens going forward the remainder of this week. We could definitely see a push higher. Like I've said before, there's a lot of headroom up in here. We see more of a resistance coming in this 280 range, this 50 and 100-day moving averages coming in up here. So I'm more interested in what's going to happen in this zone, assuming we get there, rather than what's going to happen down here. I still think we are, headed potentially higher, but the deciding factor, decision maker, is going to be what happens in this zone. NASDAQ had it lower today, but well off the lows. You can almost see how we've, this kind of serving as support here, this initial move lower on October 11th. Also struggling with the 200-day. But again, I wouldn't be surprised to see us push up in here, and that's when things get really interesting. Are we going to come above this high from October 17th and get into this kind of resistance area, or are we going to kind of fall back down? Same kind of story with Russell 2000, but basically flat on the day. And I've had this line drawn. This was kind of like a sloppy, I don't know if I'm getting this from the weekly or no, not from the weekly, where this came from, but I had this a long time ago with this touch point, some kind of, just a lot of congestion here, a lot of little support here going up, and you can see for whatever reason, oh, I know what that is. Sorry, gang. That is the closing level of 2017, so December 29th, 2017. So yeah, you do see a lot of congestion around this area. It's kind of this midpoint of this triangle consolidation before moving higher, and the pop off that level here earlier, got above it here, a little rejection, got above it, and now we're seeing it as support. So it's kind of, that's an interesting level to continue watching. And again, a lot of headroom here. Hasn't come close to the 200-day yet, but this crossover is serious. I've mentioned this before, going way back to 2015. We haven't seen a crossover like that. We saw from the 50 and the 100 coming over the 200. So I'm not expecting the volatility to be over by any means. I'm not expecting anything, to be honest. I don't know if we're going higher or lower or what, but I do expect that things, we haven't seen the last of volatility. I would be very surprised if that was the case. Anyway, not a ton going on. I mean, this is the start to a new week, and it was a pretty quiet day. I think that's probably keeping a lot of traders happy because a lot of people have been having a tough time in the equity markets. And Forex land has been relatively quiet too. Let's just go through our main pairs here. This is dollar CAD, and again, I don't see anything to be excited about here. Maybe we head higher. I had this triangle drawn here on the 1-hour chart. I didn't take this trade. It was just this breakout and fell right back down. So really false breakout. Anyone who tried to buy this retest got completely run over. And we're just kind of consolidating sideways here forever. So I'm really I'm not even interested in touching this pair right now. It's just too slow. There's no clear trend, and there's better opportunities elsewhere, in my opinion. Australian dollar is in a clear downtrend on the daily chart, and the weekly, you see the 50 and the 100 rolling over the 200. It's a clear downtrend, but it looks extended, right? You see this, we had some clear, where's my little ray tool? We had some clear bullish divergence. get out of my face. Some clear bullish divergence here as we made, you know, these lower lows, right? On a weekly. On a weekly, that's powerful, especially. But again, on a weekly, you don't know how long it's going to take to play out. So you saw that lower low on a, or a higher high, or higher low, excuse me, can't talk tonight, on the RSI with a lower low in price. That was a clear signal that, hey, maybe you should look to take profits here on this beautiful trend. And it's anyone's guess how much higher we're going to go now. But you do see we're starting to kind of correct. We're up here above the 50-day moving average, knocking up against that 100. We're over the 200 bar moving average on the 4-hour chart. And notice it's not like this where we're over, but really not with much momentum at all. This was a clear hard push higher. Looks like we put some consolidation in here and we're trying to take another attempt higher now. And when you drop down to the hour, you have the 50, the 100, the 200 all aligned nicely, moving higher. You get lower, you see more of the same. This is kind of balled up in here right now, but I wouldn't be surprised to see this push higher. And I've got these lines drawn. If you really, really want to get a trade here, I like, if you're going to trade the Aussie, I generally do not. I like taking longs with a very tight stop loss. You could get a stop here at 72.07, and that's what, 8 pips or less. I'd put it maybe a little lower, 72.05 or so, and just see if you can catch this thing here. It's very, very little risk, and I'd be looking at least, you know, up here to test these highs, you know, 40 pips or so. So you're talking about 10 pips risk for 40 pips gain. That's a 4-to-1 risk reward. That's great. If you can get that every time, you should be taking those trades. So that's kind of my quick thoughts on the Aussie. Dollar yen is continuing to grind higher, and I think this is, again, looking at this with equities. Equities don't seem interested in moving lower right now, and you can kind of see, it almost looks better from a 4-hour chart, that you could kind of draw a really steep trend line here. Almost, yeah, I want to say a rising wedge, but it's not really a very good rising wedge. But clearly there's some support here. There is, if we drop this into an hourly chart, this is kind of some horizontal resistance that's built here. Where did our 4-hour line go? There we go. Now it'll be there. So again, another trade where you can easily define a stop level. Put it under this wick, 113.05, call it, it's a 25 pip stop, and a potential push through here, I'd say you're looking at least 113.56. Not a great risk reward yet, unless you think we're going above this resistance line, right? If you think we're breaking above that, I think it's a great trade, because above that, you're talking 114.40. So I like it. You know, if you're flat, you don't have any positions, that's a no risk or a low risk long in dollar yen. And again, I'm still relative. I think we're going to see a bounce in equities yet, so that would kind of coincide with a move higher in equities. Sterling dollar, I don't like any sterling pairs at all right now. This horizontal right here is where we opened the week, and you can see this big green candle is gap up on Brexit headlines, of course. Just more garbage coming through, making noise on our charts. It retraced about half of it, went crazy, and here just whipsawing around, and we're grinding higher again. So I really don't care what the chart's, unless it's looking really, really good in terms of a setup and where I can define my risk reward, and it's not right now. I don't like any sterling pairs, because any headline, any news, any comments that come out regarding Brexit are just going to whipsaw you around, and it's just not worth playing that game for me. We're getting very, very close to this daily trend line, and if we were to trade sideways in here and see more of a ceiling develop, where you can define a clear stop loss level, I'm all for it. I'm all for taking shorts there. But until that point, until I can see more of where I can define my risk, I'm not interested in getting into this pair at all. And again, that goes from basically all sterling pairs. Sterling yen coming way up off those lows. We're going to see this probably come into play. This whole area was kind of a mess. You know, if you take that kind of box, we're in there. Let's kind of extend that up to the top of the candle wick. So we're kind of in this messy resistance zone. And again, until I see a clear ceiling, or if we're up here and they start stalling out in the 149.40 area, I'm not really interested in trading this pair, just purely due to the headline risk. And then Euro Sterling, of course, has given up all of those beautiful gains there. And again, there's one reason to stay away from this pair is purely because of the Brexit headline risk. But I just haven't seen a base develop here. Yeah, it's kind of toying with this low right here, 87.23 or so, and this trend line. This is kind of just moot at this point. It didn't hold on the upside. It didn't hold coming back down, so it hasn't been respected a whole ton. So I'm deleting that for now. And if this spaced out here and things with the UK cooled down in terms of headline risk, I might be looking at longs, but at this point, again, it's not worth trading. My favorite kind of clearest chart right now is the euro, because again, we've got clear risk reward levels, right? Let's get in on it. The daily is in a nice downtrend. You've got the 50, the 100, the 200 way up here yet, so there's a lot of head space here, but you also have your resistance here at 114.32. You've got this resistance here at 115-ish. So you know your levels, right? There's no excuse to just hold on to a trade if it goes against you. And if we zoom in here to the 4 hour, we've got the 50 bar SMA here, kind of capping things. It capped the move on Friday. I think that was Friday, the 2nd, yeah. You've got this horizontal resistance at 114.32. Notice we weren't able to close above that level on Friday. We tried 2 big wicks above it, but we didn't get a 4 hour bar close above it. So that, to me, that says a lot. The last 4 hour candle kind of tried to run up there, a nice another wick. So to me, this is showing the bearish kind of signals. It's all bearish. I like how I say that. Just bearish signals, right? And one clue for, I've been short this pair since last week at 114.21. And I rode this up. I was okay with that kind of drawdown. Took this down. I was pretty excited about this morning. I won't lie. But I wasn't around. I should have noticed this huge wick, clear inability to get lower, and I should have taken profits and waited to put those back on. I didn't, so I'm still just sitting on that trade. I don't mind. This is when you need to know your time horizon on your trade, right? I'm not in this trade on a 15-minute chart. I'm not in it on a 5 or a 1 hour chart. I'm not looking for those kind of short-term results. I'm looking for a move down to 113, a break of 113, and a move much lower, hopefully. So, as much as I would have liked to see that happen here, I think I said in my last video that I kind of expect a push down, a push up, and push down. If you think we're going to come down like this, up this hard, and then just straight down, yeah, it happens, but it's generally not the base case here, guys. Usually you see kind of hesitation as people figure out, what they're going to do. It's just not that easy of a reversal, especially when you see something go so vertical like this. Like that angle is just, it's not something that's slow and sideways and barely crawling up and then boom down. You need more consolidation to see that next push lower. And that's what I expect. So you have to stay patient as long as you understand your time frame. So again, 4 hour chart is in a clear downtrend. Daily chart is in a clear downtrend. So if you are recognizing those trends and you're trading on those time horizons, you're totally fine here. No need to panic, no need to worry. just take your time and stay patient with your trade. And you can see that as we zoom down or drill down into the lower time frames, things get far messier. The 1 hour chart here has just been ping-ponging around. The moving averages here are kind of sloppy, trying to get higher. Same with the 15. It's just messy. So know your trade time horizon. Know the charts you're trading from, the time frames, and just be patient. Let it play out. And that's what I'm doing here with the euro. This is my favorite trade setup right now. I do like the Aussie setup. I do like the dollar yen setup, but I'm more committed to this right now because I do think that we should have a good push down. And part of that is, again, looking at the US dollar index. You can see here, I talked about the support in the last video, but you can see these 2 4-hour bars, big down moves. But we're stalling ahead of the support zone. The 100 bar moving average is right here and moving higher. So I do expect, hopefully, in the next couple days, we start moving back up towards this 97 zone. And I don't have any reason to believe that we won't. NFP, here's a little clip from Forex Live, and I completely agree. The US dollar has a terrible start. Well, this is just seasonal stuff, but it's also interesting. Terrible start. November has beaten across the board, blah, blah, blah. Over the past decade, they say November has been the best month for US dollar index, averaging a climb of 1.46% in that time and climbing in 8 of the past 10 years. So basically, November is a good time to be long US dollar. And when you factor in the NFP report, this is from Josh Brown's blog, just a quick little recap here. NFP was super strong on Friday. 250,000 jobs created instead of the 200,000 people expected. Average hourly earnings, that's 3.1%, which I think was about in line with expectations, so nothing crazy there, but unemployment is still super low at 3.7%. And basically, I was talking to friends about this, like this basically seals the deal for an interest rate hike in December. I think the odds of a hike moved up from 74% to 80%, something like that. I don't remember where the source I saw on that was, but it's pretty much definitely going to happen. So there's no reason in my mind to be short the US dollar. It just doesn't make sense. I'm not going to fight that trend. I'm not going to fight the fundamentals, and I'm not going to fight what the charts are telling me. And right now the charts are telling me short the euro dollar, stay away from sterling. I'd like to short it, but I'm staying away because of headline risk. And, just play the trends, guys. So don't get caught up on the lower time frames on stuff like this. Again, always know where your risk is and if it's reasonable. And just, stay patient. And that's all I'm doing. So hopefully we have a little more action in the next day or two. If not, I will not be doing another video. So I'll update when we have something substantial to talk about. But stay safe out there, and hope you enjoyed the video. Talk soon.